So, getting started, as usual, coming into every trading week, we start off with the economic calendar. So, as you guys can see, Monday, before the week opened up, so last night, it did not show this President Trump Speaks red folder. It just popped up out of the blue. And typically, whenever you see things like this, that's just filler, so it's just noise. Don't really have to pay too close attention to it. Tomorrow, we have 10 a.m. Fed Chair Powell testifies. Whenever you have Powell speak, and it's only Powell, I've said this in the Back to Basics series, this news event is one of those low probability ones. More times than not, the market will just be pretty choppy. And if the market is choppy in the morning, then you can expect something to do in the PM session. But don't bet on anything. Like, don't expect it to be there. Just if it's there, it's there. If it's not, it's not. Don't come into tomorrow with very high expectations. Wednesday we have CPI, so we can expect a lot of volatility to be on CPI. And if there is a sequential SMT before CPI comes out on either the daily cycle or the weekly cycle, then we can expect CPI to expand in that direction. And as well as 10 a.m. Fed Chair Powell testifies again. Don't really care that much about this. More so focused on CPI, what that does. That should clear a lot of the choppiness that we've been seeing and should add some clarity to where price is likely to draw to. Thursday should be a good trading day. 8:30 a.m. We have PPI and unemployment claims. So Thursday is one of those good trading days, as well as Friday. But as far as higher low of the week, we could see Wednesday or Thursday form the higher low of the week. So now looking at the chart, I posted last night that price was trading where it opened pretty much at equilibrium of the previous week's range. So we needed to see how today played out in order to kind of gauge price action. And this is another way to look at strength in the marketplace. So if we look, we can see we have the S&P, the NASDAQ, and the Dow. The S&P opened below equilibrium of the range, while the NASDAQ opened above equilibrium, and the Dow opened way below. So looking at this, we can see that the gears have sort of shifted. So NASDAQ, what we've been keeping up with, NASDAQ usually was the weaker one, while the S&P now has transitioned to really being the strongest one. And we can see it really good now, because last week we saw it a little bit, but it was still kind of choppy, still kind of, But now we can really see that, okay, the S&P is open below equilibrium of the range. See that right here? NASDAQ opened above, and the Dow is kind of off doing its own thing. And this is another way to kind of know whenever the Dow is decoupled. Do you always wait for a true reversal to start using premium and discount advanced? No. But looking at this information right here, you could have gauged that today. So how many of you looked at the market today and the Dow kind of just threw you off? Even though it offered that daily cycle sequential SMT, price kept on being kind of stagnant and dropping even lower, and it could have caused some confusion on why the Dow was doing what it was doing. Anybody see that today? Yes. So this is one of those reasons why. Because if you look, as I've already stated, the Dow opened way below here. And I don't want to put too much onto you guys yet. But if you take this lower half, which would be discount, and split that up again into another half, you can see the Dow opened in deep discount, while the NASDAQ opened near equilibrium, and the S&P opened at discount. So you can add quadrants to the advanced premium and discount sequence to gauge strength and correlation. So I'll say that one more time. Since the Dow opened up at the lowest quadrant, it's more so the one that's out of sync and the weakest, while the Nasdaq is the strongest because it opened in premium right above equilibrium, while the S&P opened in discount. So using that information, looking at it today, you guys can see that we formed a daily cycle sequential SMT, the Dow at 9:30. What did I teach you guys? If there was no news on a trading day, what did I teach you guys? The time something would usually form at in the most recent core content series or core content lecture. 9:30. Exactly. Now, what time did this sequential SMT form? Right at 9:30. So you're seeing the things work. You're seeing it being outlined now. But we had that sequential SMT. We didn't have too much narrative backing it up. So in times where you don't really have too much narrative and you don't even have a higher time frame key level, after you see a sequential SMT, especially on the daily cycle, look for TPDs to confirm it whenever you don't really have too much narrative backing up price. As you can see right here, the 9:30 a.m. candle, this was a TPD right here. So as you can see, this would be candle 1. There's a cracking correlation here, while the S&P has a cracking correlation and the Dow has big cracking correlation. So after you saw this and then that TPD, that would be okay. That's price kind of tipping its hand. But even looking at the duos, just simply the S&P and the Nasdaq, we can see that the Nasdaq is still substantially stronger, fortifying what we saw over here between the cracks and correlations between the opens of the week with our range that we have. But if we go from the 15-minute time frame, after we have that daily cycle sequential SMT, and then we have a TPD confirming it, go down to a 5-minute time frame, pull this out. We have another sequential SMT form. Now I have it marked out under this low, which that was a minor mistake. It's supposed to be this low right here. But we have another sequential SMT confirming price, but that's not too important. That's not really what I care about, since we already have this, that daily cycle sequential SMT, and a TPD confirming it. What I'm more so focused on is, what did I teach you guys about order blocks? You have a 15-minute TPD, a true order block. Exactly. So price forms that TPD after the higher time frame sequential SMT, and then Nasdaq being the strongest asset within that TPD, we had this, the true order block. Price retraces into that true order block, forms a failure swing, while the S&P takes out that same low. So focusing on this low right here, coming over here, the S&P runs below this low, while the Nasdaq forms a failure swing. But where does it form the failure swing in? Where does it reprice into after candle 3 opens, which would be this candle right here? This is that 9:45 open, so this would be the TPD. We're focusing on candle 3's open. Candle 3 opens up, drops back below into that true order block, and then continues higher. And I saw somebody get a trade off of this, which is very well done. But this is more than an order block. I had to just give you guys that name because it would resonate with you. But this is more than just an order block, because you can look. This is to the tick, to the tick precision when this forms. And even down here, even though it didn't hit quite to the tick, it still respected it nicely, and you could have gotten a wick entry and then bam. So since I've introduced this, how many times have you guys seen this? Just by back testing, just by going and looking, how many times have you guys seen this? And how many times has it worked? every TPD. So this is more than just an order block. There's so many more components. I just had to give it the name, the order block, so you guys could actually understand it a little bit better. But this is a reversion level. And yes, this Saturday, we'll go way more into it. But this is a reversion level. Why is it a reversion level? Because this is where price refers back to on candle 3. This would be candle 3. Oops. This would be candle 3. Whenever candle 3 wicks down, where is it wicking down to? Where is it trying to go before it continues higher? Because how many times, just with precision swing points, put TPD out of the way. You see a sequential SMT and then a precision swing point, but you don't know where to enter. On candle 3, you have no idea where to enter. With this, you know exactly where candle 3 is wicking down to. You know how far it's going to go down. You know exactly where it's trying to go. You know where it's reverting to. So that is why it is a reversion level. But anyways, and yes, we'll cover more on it, don't worry. Because it just goes even deeper than that. But the Dow is sort of out of sync right now. And wow. The Dow is sort of out of sync right now. Why is it doing this? There we go. But my focus is more on the NASDAQ. I want to see how we treat this 4-hour inversion for value gap since Monday expanded through that. I want to see if we can retrace in here and then form something of substance and then continue higher, taking out these equal highs. That's what my eye really draws towards. Do we need to wait for the close of the third candle of the TPD to enter the order block in the middle time frame? No, so remember in TPD part 1? In TPD part 1, once you have a TPD form, on candle number 3, if you're bullish, you want to buy below the opening price of candle 3. If you're bearish, you want to sell above. This, a reversion level, tells you where to buy, below or sell above. When we have aligned the 4-hour fair value gap with the 15-minute sequential SMT, is it the same with 4-hour inversion fair value gap? Yes. And this is another one of those little cookies. So I get asked so many times, how do you know when a sequential SMT will take place, or what cycle sequential SMT will take place before it actually does it? Because you guys have seen me beforehand say, okay, I think a daily cycle sequential SMT is going to form here, or we should see a 90-minute cycle, or we should see a weekly cycle sequential SMT before it even happens, before the day even opens up, or the day even plays out. You can use PD arrays to kind of guide you. And if you watched the core content lecture, I said fair value gaps that align with each other are high probability. If you have a 4-hour fair value gap and a 1-hour fair value gap inside of each other, so what do I mean by that? Let's say this is that 4-hour fair value gap. And then within there's like a 1-hour fair value gap. Whenever price retraces, since the 1-hour time frame, or if you have a 1-hour gap, then you're looking for a 5-minute sequential SMT, which would be 90 minute cycle. I might have done that a little bit backwards, but you guys get the point. And yes, it works with SMT skip. But once you have that narrative established and there's two gaps overriding each other, you're looking for either one or both of these cycle sequential SMTs to form within there. So that's how, if you go back and look, on majority of the times I said, okay, we need this, or we need this, or we need this. If you go back and look, there's a corresponding PD array that goes with it on its correlated time frame. Now, is it going to work every single time? No. More times than not, you can expect it to work, as long as your narrative is correct. And you guys know I'm never two-sided. I'm always one-sided. Either I'm right or I'm wrong. Last Friday, we didn't have a 1 hour TBD to confirm. The bearish weekly cycle sequential SMT was the 2 a.m. 4 hour TBD sufficient to confirm both bearish monthly cycle and weekly cycle sequential SMT? Yes. Assistant, get him out of here. No, I'm kidding. How deep do you want? Could you please clarify this a little slower once more, please? You can just go back in and watch it. Don't worry, everything will be recorded and uploaded by tonight. If there's multiple 1 hour fair value gaps in that fair value gap, are you monitoring each gap for the 90-minute cycle sequential SMT? If that daily cycle sequential SMT forms, then all I'm focusing on is the daily cycle sequential SMT. If there's no daily cycle sequential SMT, let's say, hypothetically, all right, with what you're talking about, there's multiple hourly fair value gaps within a higher time frame fair value gap. What you're saying is, how do I know which one to pick? Your biggest concern should be what the higher time frame one is. So if the higher time frame one, let's say, is a 4 hour time frame fair value gap, then you want to see a daily cycle sequential SMT. But let's say both assets, or all three assets, open up, run the low without forming that sequential SMT to the side that you want to see it form. If it does that, then you would drop down lower and look for, within the gap, the permitted time frame cycle sequential SMT. But your main concern should be what that higher time frame gap is, and look for its correlated time frame cycle sequential SMT within there. Because remember, the higher time frame holds the higher power. Same thing applies with quarterly theory. Higher time frame cycle, higher time frame power. To validate a true open and advanced premium and discount, SMT is required, but does it have to be on the same time frame? For example, my true day open SMT is on the 15-minute mandatory, or can an SMT on a 1 hour also validate a true day open? Yes, as long as it's correlated with the true open of its cycle. So, bringing out all the questions today. But let's say, for example, we have this true open right here. then we also have this true open right here. So this would be your higher time frame true open and your lower time frame true open. If price trades above that higher time frame true open and then that lower time frame true open opens up, as long as I'm trying to figure out the best way to put this into words, but you want the true opens to be stacked, if that makes sense. So you don't want to look for SMT in the middle. It's either way above or way below. If you're bullish, it's going to be below. If you're bearish, it's going to be above. Both of them. Does that make sense? Remember you saying if there is a continuous PSP, then it's low probability. However, for today, the 930 and the 945 were 15-minute PSPs with the S&P. Just because it's low probability doesn't mean there's nothing to do at all. Was it the cleanest? No. I didn't even look at the markets today because I know a majority of the opportunity is going to be later on. I'm just showing you proof of concept that it will continue working, and it works, and you can navigate the markets with this way, and it'll be there. And this is stuff that I've brought to you. You haven't heard of this before. Yes, do not put this stuff on. If you put this on Twitter, we'll know. We'll know now who the leakers are. It works with inversion fair value gaps too, right? What are you talking about? What last week bearish monthly sequential SMT due to your bias? What keeps you bullish? Because we have that weekly cycle. Not weekly. We have a yearly cycle bullish sequential SMT still in play, and the monthly cycle sequential SMT that formed happened within a gap. And yes, I've said in the past, don't use yearly cycle, don't use yearly cycle. Under very, very, very specific circumstances, if it gets mega confirmed and you see it play out, then chances are it's going to work. But yearly cycle, that's one of those ones that happens once in a blue moon. Because I remember, I believe it was a little bit last year, towards the end of the year, so many people were seeing bearish yearly cycle sequential SMTs, and everybody was getting burned trying to short. And I was over there on Telegram whenever I did these for free, saying price is going to continue going higher and higher and higher and higher and higher. And everybody was like, oh my goodness, you've been saying it's going to go higher for so long, but we have this playing against it. I'm like, I don't care. It's going to continue going because these markets are designed to literally trade higher until something is presented that says otherwise. Do new week opening gaps have time frame alignments for SMT? Yes. New week opening gaps have their own time frame, as well as new day opening gaps. And its own cycle that it's correlated to. And if you go back and study new week opening gaps being in line with 4-hour fair value gaps or 1-hour fair value gaps for continuations, which would be lower time frame reversals, you'll see it. When I use true order blocks, where is the safest place for stop loss? We'll get into that this weekend. The yearly one was partial, right? Do you give the same importance to full and partial sequential SMT? I think not. So what made you trust the partial? Did you have a second stage or something? Yes. So if you guys go back and look, and I didn't cover this at all, but there was that yearly cycle sequential SMT, which I didn't want to see form yet. I wanted to see all the assets run that low of Q4 yearly cycle. You guys know that? And then I said we could probably see some consolidation and then see what we're seeing now, which would be a trade higher. And let me actually show you guys what I'm talking about. So I wanted to see it run lower, clearing these lows, and then seeing consolidation, and then seeing this. That's what I wanted to see. But we formed that SMT there, and then we also had that doubled TPD get confirmed by an intermarket SMT, which I didn't. It was with the bonds market. I haven't introduced the bonds market yet because there are some things that go to it. But there was a doubled TPD there on the daily time frame, which was confirmed by the weekly cycle intermarket sequential SMT, and then CPI released, giving that expansion and giving insight, okay, the market's probably not going to come back down here. It's probably just going to trade higher and higher and higher. And that's that characteristic that CPI has. And like I said, this was a once in a blue moon type of situation. This isn't repeatable. You're not going to see this all the time. So that's why I didn't really bring much attention to it, because the things that I share with you guys, they're repeatable. You see them happening week after week, day after day. So in the case where the M5 or the 5-minute time frame reversion order block doesn't get revisited and just takes off, the TPD is probably fractal, and it's the 1-minute TPD that gets hit. I haven't backtested this, but just a theory crafting. So if you look at my profile picture, you'll see depth. The chart has a y-axis and an x-axis, but does it have a z-axis for depth? That's that's the main thing. If for TPD, candle 2 is the same color on all 3 pairs, but there's a cracking correlation between candle 1 and candle 3, is it still considered a TPD? Yes. How were we supposed to do without your bias then? Wait for CPI or just wait for more teachings to come to get independent of you? What do you mean? Are we going to have an in-depth explanation on key levels discussed in Core Content 5? Yes. Z-axis, is that something we're going to learn? I don't know what you mean by that. You're already learning it. You just you just don't know it yet. You're creating monsters? Yes, some of you guys are going to be better than me. 100%. And some of you will go off and do your own thing, and that's good. That's what I like to see. But just don't pretend like you created some of the things that I'm going to share. If you do put it out there, just give credit where credit is due. Yeah, I see something, you guys. You guys are crazy. Reversion level, the 5-minute order block that forms before the TPD candles are within candle 2 of the TPD candle, preferably within candle 2. And then you're using the open, high, low, close, which would be the power of 3. If some of you guys know that and have studied ICT, you're using the power of 3 on candle 3 just through the scope of one time frame lower. When are we starting 1v1 or one-on-one calls? We'll get that rolling out probably next week, and then a couple hours a day, attend to you guys. 1-1 trade wars. Yeah, we'll probably start rolling it out next week, and the assistant will make an announcement. All of that, I'll tell him my schedule and everything, because I'm pretty busy right now, but I'll make time for you guys. He said $300 for this is what's crazy. If you don't like it, then leave. Nobody's keeping here. You can't deny the precision though. I see it now. Yeah, you guys got it. You guys got it lucky. You guys got it easy. But you guys were my first group of people. So compared to what the price is going to be whenever I reopen, it's literally going to be strictly based on how well I do these next 2 months. How can we renew the yearly access? We'll get to that whenever it's time. For the next group, you're just going to call price, right? Yeah, pretty much. So you guys are going to be the only people that have direct access to me. With the one-on-one calls and everything of that manner, you guys are the only ones. You guys got the best experience out of everybody. Are we always expecting SMT to happen between candle 2 and candle 3? Sometimes it's there, but the price still runs candle 2 and candle 3. Candle 2 and candle 3 lows or highs on the Dow especially, yes. Because the Dow is the one that kind of, for example, once you have insight that the Dow, is doing its own thing, that's where you'll see things like that. Snowflakes is like a TPD. Snowflakes, or that indicator is TPD. And yes, you guys will stay at the price that you're at because I'm probably going to switch to a month-to-month kind of thing. So what you guys paid 3 months for, somebody's going to pay like 1 month for. When face reveal? Probably at the end of this year. My voice does not match my face at all. When is the assistant going to speak? I don't know. everyone will be able to renew? Yes. If you're here right now, if you choose to renew, then you can. Whenever any subscription you have runs out. But anyways, we're going to be wrapping this up pretty shortly. So does everybody know what we're looking for heading into tomorrow and Wednesday? We can already see it's giving a nice little reaction. But it wouldn't be surprising if we came back down and then formed an SMT and then, yeah. But anyways, hopefully you guys found this one insightful. I will be speaking again with you all tomorrow night in the price review. So don't try to push ahead too hard or come in with high expectations ahead of CPI. Remember, majority of the volatility will be later in the week. So be safe. Take care.